Okay, welcome back. In today's video, I'm going to be back testing the British pound against the Swiss franc. If you don't know about this strategy yet, I'll leave a card up in the top right hand corner of the screen so you can click on it and learn. And actually, that reminds me, everyone here is interested in trading, whether it's trading stocks or Forex. So hear me out. If you're looking to start trading or already trading with little to no success, you should remember to trade with a regulated broker. They are bound by the law to offer complete transparency, so you know what's happening to your money. They also give risk warnings and fraud protection. To make your search easier, I linked a regulated broker down in the description that even gives a $30 trading bonus once you sign up. It will be the first link in the description. Well, we're going to be starting from the 9th of May up until present day, which is the 27th of May. So let's see how many trades we get. Okay, starting from the 9th, we have a buy setup. That's because the price went up the previous day. So on midnight we were looking for buy. And we got one. We got an advanced buy setup. Let me draw out the Asian box. Okay, as you can see, let me put some arrow. Price went above the Asian box. Let me draw the middle as well. Oh well. Trend line. Okay, as you can see, price went above the Asian box, then came down and bounced off the middle of the Asian box right here to give us an advanced buy setup. See? Okay, so let's see how many pips that is. So along, would have entered at the very first bullish candle off the middle of the Asian box. So we've entered right here. 30 pip stop loss. And it went up to 115 pips profit. See, 99. 115 pips profit. So let's mark that down. 115 pips. Put it right above. Okay, now we're coming in on the 10th of May. And we're looking for a buy setup because price went up the previous day, which we just did. So we're looking for a buy setup and we got one. We got a normal buy-in setup right here. Let's show the Asian box again. You can see price drop below the Asian box, then went up, which is a normal buy setup. If you're confused, check out the course. It'll make sense then. So let's calculate. Now let's see how many pips that is. Oh, and in this case, for a normal buying setup, remember we look at the MACD for entry. So we enter on the very first green bar on the histogram of the MACD. So right here. Yep, right here. We enter right here. 30 pip stop loss. And price went up for 52 pips. So let's mark that down. 52 pips. Okay. Now we're coming in on the 11th of May. And again, since price went up a bit on the 10th of May, we're coming on the 11th of May looking for a buy. And we kind of got one here. Let's draw the Asian box. Okay. So as you can see, price dropped below. Oh, wait. Bring this down a little bit more. Okay, as you can see, price dropped below the Asian box and then came up for an entry. Let's see if we'll have got a profit for this trade. Okay, and we use the MACD for all entries same way. So enter right here, 30 pip stop loss, and price went up for 22 pips, around 22 pips, around that. So this would have been a break-even trade because we break even at 20 pips. So let's mark it down as break even. Break even right there. Okay, now we're coming in on the next day, which is the 12th of May. And since price went down on the 11th, we're coming on the 12th looking for a sell. And we kind of got one right here. That's just the Asian box. As you can see, price went down below the Asian box, which is right here. Then went up again. That's just the middle of the Asian box. I almost forgot. This is the middle right around here. As you can see, price drop below the middle. Let me zoom in. As you can see, price drop below the Asian box with this wick right here, this long wick, then came up back with this small bullish candlestick right here. See, went up and then bounced off the middle of the Asian box. We've given us an entry right here. So let's try this up, sharp position, giving us an entry right around here. 30 pip stop loss. Let's see. And again, just like the previous day, price went down for 21 pips, which would have given us a break-even trade because we break even at 20 pips. So let's mark that down as break even. And remember, break-even trades mean that we need a win. No, we lose. We just break even. Oh, it's not straight. We just break even. Okay. Now moving on from the 12th, we go to the 13th of May. And in this case, we're looking for a buy setup. Because as you can see, on the 12th of May, price opened at this price right here. And closed all the way up here. At this price. Which means price is going up. So we're coming in on the 13th of May looking for a buying setup. And we got one right here. That's just the Asian box. Zoom in a bit. Okay. And as you can see, we have a normal buying setup right here on the 13th. See, price drop all the way down. Price use within the London session, price dropped down. And then it kind of reversed back in the New York session right here. Right over here, New York session. And giving us a buying entry right after the London session into at the beginning of the New York session. So normal buying setup right here. So let's give ourselves a long position, and our entry would have been right here after this bearish candle right here. So entry would have been here, giving ourselves a 30 pip stop loss. And let's see where price went. Okay, price went all the way up for 253 pips. See, 30 pip stop loss, just shot all the way up, and then it didn't come back down to our entry point. Just went all the way up. So let's mark that down as 253 pips. right there, 253, which would have been a very good day. I would have held this trade up for 3 days. Okay, now we're coming on the 16th of May, which as you can see, the previous day, which is what we just did on the 13th, price went up. So we're coming on the 16th looking for a buying setup, and we got one right here. And I don't think we need to draw out the Asian box for this one. It's pretty clear. As you can see, price dropped below the Asian box right here, and then giving us an entry somewhere along here for a buy, and went all the way up. And it's a normal buying setup, so you know we need to look at the MACD for an entry. So get a long position out. As you can see on the very first green bar on the histogram, we enter. So right here, give us about 30 pip stop loss, and let's see where price went. Oh, well, actually price went up for 40 pips right here, and then came back down. So more like we've taken profit at the 40 pips right here, but 40 pips is good still. Let's mark that down as 40 pips. If price didn't come back down, we could have held it all the way up for a possible 150 pips. But we need to be consistent here. So okay, coming down the 17th of May now. If you look closely, let me drop the Asian box first. Okay, if you look closely, price did go above, see, the Asian box with this wick right here. See this wick? Price went above the Asian box and then dropped down. So let's draw the middle of the Asian box to make it clear. Okay. Price went up and then dropped down and bounced on the middle, bounced off of the middle of the Asian box right here. I remember what I told you in the last video, well, I think it's the last video, where with trades like this, all we look for is for price to just come close enough to the middle of the Asian box, and we decide if we take the trades based on the stop loss. So our entry would have been right here after the bounce of the middle of the Asian box. So we make sure our stop loss will fall below the middle of the Asian box, just to know if we're gonna take the trade. See? And in this case, price did for 30 pip stop loss, and then price went up for 60 pips. 60 pips profit. So let's mark that down at 60 pips. Okay. So far we don't have any losses, just profits and break-even trades. Okay, for May 18th now, because price went up on May 17th, we're gonna be looking for a buy setup, and we got one for May 18th. Let's draw the Asian box just for clarity. Okay, as you can see here, price dropped below the Asian box right here, and then bounce, not really bounce, but came up back for an entry somewhere along over here. And you know what kind of trade is this? This is a normal buying setup, and a normal buying setup we use our MACD for entry. So let's get a long position out. Our entry would have been right here on this candlestick right here, this bullish candlestick. Let's give us about 30 pip stop loss. And price went up for 27 pips, which would have given us a break-even trade, because we break even at, well, you already know, 20 pips. So this might known as break even. Okay. Well, you might see we missed this trade right here, this selling trade right here. But this does not align with our strategy. So we just leave it at that. Okay. Now coming in on the 19th of May. Since price dropped on the 18th, we come in on the 19th. We're coming on the 19th looking for a sell. For mid 19th now, we're coming in looking for a sell. But as you can see, we would not have gotten any entry here, because price just went down. It did not come up back to bounce off the middle of the Asian box, which would have given us a sell entry coming down. Or it did not come above the Asian box for normal selling setup. It just went down, so no entry. So let's put this down as a no trade. No trade. No trade just meaning that we wouldn't have taken a trade on that day. Okay, now we're coming in on the 20th, and we're looking for a sell, because price went down on the 19th. And we kind of gotten one right here. We got a normal selling setup right here. If you look closely, price went above the Asian box, then come down for an entry. Let's see what this trade is about. And for normal entries we look for for normal setups we look for an entry on the MACD. So our entry would have been right here, 30 pip stop loss, and price went down for 23 pips before it came up back. Yeah, 23 pips, which would have given us a break-even trade. Let's put it down as break-even. Okay, now on the 23rd, which is our very first losing trade right here. You may be wondering, how is this a losing trade? Well, let's break it down. Let's draw the Asian box. Okay, let's draw the Asian box right here. And if you look closely, this could have been a reversal selling setup right here, but the previous day's low was all the way down here. Previous day's low was all the way down here. If the previous day's high was all the way down here. If the previous day's high was up here or even here, it would have been a reversal selling setup. But since it's all the way down here, we're still looking for buys, because the price went up the previous day, so we're still looking for a buying setup right here. So let's draw the middle of the Asian box. Okay, and as you can see, this was our setup right here, or this would have been setup we're looking for. The price went up above the Asian box, then drop down, and then bounce off the middle of the Asian box for an entry. This would have been our trade right here, which is an advanced buying setup. And our entry would have been on this on this singular bullish candlestick right here. Because let's imagine you're in the moment. Cut out everything after here, after this bullish candlestick. Cut out everything over here. This would have been what we see, what we see on the 23rd of May at 4 a.m. This would have been what we saw, what we see. Just this bullish candlestick. So our entry would have been right after this bullish candlestick right here, which is a long, and with a 30 pip stop loss, and price only went up for possibly 5 pips, and then came all the way down and hit our stop loss. So this trade is our very first losing trade, as long as an L. Our very first loss. So okay, so we're moving on to the next day now. And as you can see here, price dropped on the 23rd. Price dropped. So we're coming on the 24th now, looking for a selling setup. Let's show the Asia box. Okay. And if you look closely right here, we got a sell setup right here. A normal selling setup. As price went above the Asian box. Let's make this arrow thinner. As price went above the Asian box. Slightly, but came all the way back down for an entry. And in normal selling setups, or just normal setups in general, we look at the MACD for an entry. So in this case, we're looking for our very first red bar on the histogram. So get a sharp position, and we'll have entered right here with a 30 pip stop loss. And price went all the way down for 140 pips profit. So let's mark this down as 140 pips. $140. So okay, so we're coming in now on the 25th of May. And on 25th of May, we're looking for a sell because price dropped the previous day. So we're coming in looking for a sell. Show the Asian box for clarity. And as you can see here, we got a normal selling setup. As price went above the Asian box, then dropped. Okay. Okay, so on normal setups, like I just mentioned, we look at the MACD for our entry. So entry would have been right here after this bullish bearish candlestick right here with a 30 pip stop loss, and price went all the way down to for 44, possibly 45 pips. Yeah, 45. Okay, let's put down as 44 pips. Price went down for 44 pips profit. Yeah, the next day now, which is the 26th. Okay, the 26th. Sorry for yawning, it's kind of late. It's kind of late here when I'm recording this video. So okay, so on the 26th now, we're looking for a buy because as you can see on the previous day, which is pretty clear, price went up. So we come in looking for a buy setup, and we got a setup right here. Ooh. Okay, we got a setup right here. As price dropped below the Asian box, and then came up for an entry right here on the very first green bar on the histogram. So our entry would have been right here after this is big bullish candlestick. So put a 30 pip stop. Oh no, wrong. Is the other way wrong? Long. Okay. 30 pip stop loss. And price went up for 23 pips before coming back down and hit. Because before coming back all the way down. So you know at 20 pips we break even. So this is a break even trade. Okay, now we come in on the current day, which is May the 27th, and just like the previous day. No, let me see. Let me just double check this. I could just check the daily time frame. Okay, so we come in looking for a sell on the 27th. We come in looking for a selling setup, which we got. I don't need to draw out the Asian box here, but you can see price came out the Asia session and went up above it, then came back down for an entry, which is a normal selling setup. And you know, for normal setups, just like I mentioned before, we look at the MACD for an entry. And in this case now, just like I mentioned in previous videos, I think it's my previous video, in cases like this where there's no change in the bars on the MACD, price is already going in our direction, or the MACD is already pointing in our direction, we just take we just trade after the very first candlestick. And like in this case, price went above the Asian box on this candle, this doji-like candle right here. Price went up and then it came down. So our entry would have been right here on this very first bearish candlestick right here for with 30 pip stop loss. And see, price went all the way down for 57 pips. Yeah, 57 pips, as you can see. So let's mark it down as 57 pips. Okay, let's do some calculations. Now, let's see how many trades we took. Let's see how much trades we took and the win rate. I calculate the win rate after. So it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 trades. And we do not count the no trades, only the break-even trades, losses and profits. So 14 trades. We got the calculator. Okay, 14 trades. And how many we won? We won 1, 2, 3, 4, 5, 6, 7, 8. So we won 8 out of 14 trades. So let's calculate that. Okay, so our win rate within this time period was 57.1% win rate. 57.1%, which is more than 50%. So it is very good. and we only lost how many trades? One. Yeah, we only lost one trade, and the others were break even. So think about that. We won 8 out of 14 trades, and the remaining 5 were break even and 1 was a loss. If we do not include the break even trades, our win rate would have been somewhere around probably 80% and or above, somewhere around that. But counting the break even trades, our win rate is 57.1%. And let's calculate how many pips profit was made in this time. Okay, let's calculate. We have 115 plus 52 plus 253 plus 40 plus 60 plus 140 plus 44 plus 57 equal. Okay, this is how many pips we this is not the profit, this is how many pips gained within this time. So now to calculate the profit, now we need to subtract the one losing trade from this. So the one losing trade was 30 pips, because we always restore the pips. So let's subtract 30 from this, and we get 731 pips profit within this time period, which is a time of like I'll say well, 2 weeks. I could say around 2 weeks. So within 2 weeks, 731 pips were made. 731. For reference, if we're trading with one standard lot size, which is $10 per pip, 731 pips would have made $7,310 in profit within 2 weeks, just trading one pair, which is the British pound against the Swiss franc, just one pair. And in our previous videos, I think our previous videos, we got probably around 1,000 pips combined. So let's add on another 731 pips on that 1,000 pips. So that's almost 2,000 pips of profit within like 2 weeks of trading just 3 pairs. So let's put that, let's say it's 1,500, which is less than what I just said, but let's calculate this at one standard lot size. Just trading 3 pairs, 3 currency pairs within this time period, it's within 2 weeks. Trading at one standard lot size would have given us $15,000 of profit, which is not even a month. Not even a month of trading. That just shows you that this strategy works, and it's very, very profitable. Very. If you're looking to learn this strategy, just check out my previous videos. Check out my explanation on the strategy, then check out my backtests and breakdowns, just like this one. And make sure to do your own research, or do your own practice, your very own practice, so you can fully understand the strategy and learn to use it when trading. You might start off at probably like a 40% or 38% win rate, but if you're trading at a 1 to 2 risk to reward or even more, you're gonna be profitable. As long as your win rate is above 25%, you're gonna be profitable. trading at a 1 to 2 or above using this strategy. So that brings us to the end of the video here, right here. See, this would have been 731 pips in 2 weeks of trading, and I'm out.